Welcome, everyone. Let's get started. There's a few more people just coming in. Welcome. Good afternoon, everyone. Welcome to Phase 3 of the Financial Planning Challenge. This is the third and final phase of the three phases. What these students have been through so far in Phase 1 is they prepared a written financial planning case that is very real life, very similar to what you're having to do for the CFP exam now. That started with a very large pool of schools. The top 8 schools in Phase 1 were invited to come to this national conference, where they competed in Phase 2 yesterday. Phase 2 was to give an oral presentation of those cases, and then today we're going to have a game show style question and answer with 30 questions that are going to be very similar in difficulty to what you would find on the CFP exam. So what I'd first like to do is recognize the 8 schools who are here. The University of Akron, Kansas State University, University of Georgia, Texas A&M, Texas Tech University, Utah Valley University, Virginia Tech, and William Patterson University are the 8 schools who have made it. Let's congratulate those 8 schools for making it to the national conference. My name is Matt Jorgensen. I'm with Ameriprise Financial. Specifically, I work in the financial planning department at Ameriprise. I'm a home office employee. I work with financial planning. I support advisors in the field with the tools and resources that they use to do financial planning. If anybody has any questions about what I do and what my team does, we'll have a lot of opportunity to talk later today, and I hope that you all can come to the event that we're hosting this evening at an advisor's office here in Boston. We have an advisor who has a very nice office in a trendy part of the city. It's going to be a lot of fun. There's going to be good food and drink. We'll have some very good speakers, and we hope that you can all attend. I hope that you're having fun here in Boston. This is my first trip to Boston myself. I got a Metro pass, so I've ridden the subway a few times already. It's been a lot of fun. I hope that you're excited for the conference now that it's finally begun. There's going to be a lot of very interesting sessions that you can attend. Lots of interesting content in all of the areas of financial planning. I encourage you to take advantage of that and sit in on as many sessions as you can. I'd also like to recognize the judges who were involved with this financial planning challenge. The judges for the Phase 1 competition, that's where we graded the written plans, were 3 organizations. First of all, Christine Beck is a PhD. She's Program Director of Financial Planning for the Department of Finance, Financial Planning, and Insurance for Cal State University in Northridge. Secondly, Peggy Doviak is PhD in CFP and is owner and certified financial planner practitioner of DM Wealth Management. And the third judge in Phase 1 was myself and my team at Ameriprise. We also participated in the judging of the written plans. The judges for Phases 2 and 3 are 3 individuals who are sitting over here, and I'm going to recognize them. First of all, David Bresler is a CFP and CRPC from Ameriprise. He's Vice President of the National Sales Desk of the Advisor Business Development Group at Ameriprise. Andrew Head is a CFP. He's an assistant professor from Western Kentucky University. And Kim Selby, CFP, is a board member of the Massachusetts FPA. So I believe you may be the only person in the room who slept in your own bed last night. So let's show. Oh, well, maybe there's no one then. Let's recognize not only the judges, but all of the volunteers at this event. Next, what I'm going to do is I'm going to read the rules and the guidelines of exactly how this competition is going to work. All 8 teams who are here will be participating in Phase 3 of the competition. We're going to have 5 questions each in each of the 6 areas of financial planning, starting with financial principles, principles of financial planning, protection, sometimes we refer to that as risk management, investment planning, tax planning, retirement planning, and estate planning. We'll also have a final question that's worth a little bit more. You'll have a little bit longer to answer that one. The higher the point value, the more difficult the question. The questions are multiple choice. Rather than A, B, C, D, they'll be listed 1, 2, 3, 4. There is only one right answer per question. There is only one right answer per question. The teams will take turns choosing the question that they want to have read. So unlike the Jeopardy game that you see on TV, rather than the person who answered the last question correctly chooses the next question, we're just going to simply rotate around the room. So everyone will get an opportunity to choose the question that they want next. We'll start with Akron, all right? When the team gets the correct answer, the point value will be added to their score. If an incorrect answer is given, no points will be awarded. There will be no points deducted. You just simply don't get the points for that question. Teams will have 30 seconds to write down their answers and hand the answer to their FPC representative who is sitting in the middle of the aisle. So how this will work is after I've read the question and read all 4 of the answers, I'll ask Destry to start the timer, and you'll see a 30-second timer counting down on the screen. During that 30 seconds, the 3 representatives from each school will talk amongst themselves, use your HP calculator, come up with your answer, and at the end of those 30 seconds, what I want you to do is write your answer, 1, 2, 3, or 4, on a piece of yellow paper and slide it to the middle of the aisle where your representative is. At the end of the 30 seconds, I'm going to look at all 8 of our volunteers to make certain that they all have their answers ready to be revealed. And then what we'll do is we'll reveal the answer, we'll go around the room, and we'll see what everybody answered. All right? If a team disagrees with the correct answer and can be prepared to provide the rationale for their answer, the team may ask for an appeal of the panel of judges sitting right over here to determine if their answer may be ruled correct. The appeal must be requested before the next question is asked. The appeals board is a majority vote and the decision is final. So again, if there is a dispute, if there is a disagreement in the answer, if you believe that you have an answer that should be considered and can provide an immediate rationale for why you believe that is the case, let us know before we ask the next question. There will be a final question worth 750 points. Teams will be given the category of the question before it is read. Once the question is read, the team will have 45 seconds to answer. Teams may use a financial calculator. I'm looking around and I see that everyone's got a financial calculator in front of them. That's good. Obviously, the use of cell phones and tablets and other materials is prohibited. The last thing I'll mention is that after we have answered the 15th question, we're going to take a 10-minute break. We're all going to be needing a deep breath at that point. So I'll try to remember when we've completed the 15th question, but if you see that we've completed 15, just raise your hand and remind me that we're going to take a 10-minute break. All right? Are there any questions before we get started? Good luck to everyone. This is going to be a lot of fun. All right. Destry, are you ready? Okay. Akron, we're going to let you choose the first question. Principles for 100. All right, so what I'll do is I'll read the question and all 4 answers, and then we'll start the timer. Which item should not be included in the net worth statement? Is it 1, student loan balance, 2, current home value, 3, checking account balance, or 4, taxes paid? Please start the timer. Ten seconds remaining. And the time is up. All of the answers should be to the middle. I'm looking at the volunteers, and it looks like we have all of our answers. Let's start. Go ahead and reveal the answer. And the correct answer was 4, taxes paid. Let's start with Akron. Akron answered number 4, which is correct. Texas Tech University answered 4, which is correct. A&M answered 4, which is correct. Kansas State answered 4, which is correct. Georgia answered 4, which is correct. Utah Valley answered 4, which is correct. Virginia answered 4, which is correct. And William Patterson, I'm very pleased to announce that everyone in the room knows that taxes paid are not included in the net worth statement. Taxes paid, of course, are found on the cash flow statement. Good question. Let's go to Texas Tech University to choose the next question. Principles for 200. All right. Stephen's mortgage payments, including principal and interest, are $1,300 at the end of each month. He has a 30-year mortgage with a 4.25% annual interest rate compounded monthly. What was the amount of Stephen's original mortgage? And round the answer to the nearest $100. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Can all of the volunteers confirm that you have your answers ready? A&M doesn't have theirs to the middle yet. That's fine. We'll have to get started with the questions. All right. Let's reveal the answer. The correct answer is number 2. 264,300 is the answer. Let's start with Akron. What was Akron's answer? Number 2 is correct. Texas Tech was 2, which is correct. A&M did not submit an answer, which would be incorrect. Kansas State was 2, which is correct. Georgia was 2, which is correct. Utah Valley answered 3, which is not correct. Virginia Tech answered 2, which is correct. And William Patterson answered 2, which is correct. Did you get them all? Okay, great. This is, of course, a problem requiring a calculator. Can you go back to, go to Principles 200. Let's leave that one up for 1 second. These are the inputs that I did on my calculator. The payment would be negative $1,300. The N would be 360. We need to turn our term into months. The I would be 4.25 divided by 12 to put the interest into a monthly amount. Future value is 0, and we solve for present value, which is 264,300. All right. Texas A&M will choose the next question.
We'll do
Estate planning for 500. Here's the question. John received a gift of 100 shares of ABC stock from his Uncle Mike. Uncle Mike paid $130 per share for the stock in 2010. When he gifted the stock to John in 2013, it traded at $100 per share. If John sells the stock 6 months later at $80 per share, what is his taxable gain or loss? The possible answers are 1, 5,000 short-term loss, 2, 5,000 long-term loss, 3, 2,000 short-term loss, or 4, 2,000 long-term loss. Please start the timer. And the time is up. All of the answers should be to the middle. Do any of the volunteers not have an answer from their school that they're representing? Okay, great. Let's reveal the answer. Oh, Utah Valley does not have theirs. I'm sorry, the time was up. Let's reveal what the answer is. The answer is C, or 3, 2,000 short-term loss. Let's look at what the answers were. Akron answered 2, which is incorrect. Texas Tech answered 3, which is incorrect. Texas A&M answered, I'm sorry, 3 is the correct answer. So Akron had 2, which is incorrect. Tech had 3, which is correct. A&M had 3, which is correct. Kansas State had 4, which is incorrect. Georgia answered 1, which is incorrect. Utah Valley, I didn't see the answer come in time, so we're going to say incorrect. Virginia Tech answered 3, which is not correct. And William Patterson... 3 is correct. I can confirm it's correct. I did the problem myself last night. 3 is correct, and William Patterson answered 4, which is not correct. So in the business, we call this the double basis rule, all right, the double basis rule. When the gifted property fair market value equals or exceeds the donor's basis, the recipient will use the same basis. When the fair market value on the date of the gift is less than the donor's basis, the recipient will then have 2 different bases for the gift. For property sold with gains, you'll use the donor's basis and the donor's holding period. If the property is sold at a loss, you will use the fair market value and holding period at the date of the gift. So that's the difference between the two. It's called the double basis rule. Good question. We've answered 3 questions, so Kansas State will choose our next question. Protection for 100. Here's the question. The concept of restoring someone to the same financial position in which they were before a loss is called 1, insurance, 2, indemnity, 3, risk transfer, or 4, hazard. Please start the timer. Ten seconds. And the time is up. Are all of the answers to the middle? Anybody not have the answer ready? Let's reveal the answer. The answer is 2, indemnity. Akron, what did you answer? Akron answered 2, which is correct. Texas Tech answered 2, which is correct. A&M was 2, which is correct. Kansas State answered 2, which is correct. Georgia answered 2, which is correct. Utah Valley answered 2, which is correct. Virginia Tech answered 2, which is correct. And William Patterson also answered 2, which is correct. Compensating someone for a loss is what we call indemnifying the person. Indemnity is to be compensated for a loss. All right, let's go to Georgia to choose the next question. Principles for 300. The question is, assume Jill, who is in a 28% tax bracket, is considering whether to invest in a municipal bond with a 4% interest rate. What yield would be required on a taxable bond to equal this return after tax? Is it 1, 3.69%, 2, 4.28%, 3, 5.56%, or 4, 5.12%. Please start the timer. Ten seconds. And the time's up. All of the answers should be to the middle. Do we have any answers that have not come in? All right, let's reveal the answer. The answer is number 3, 5.56%. Akron answered 3, which is correct. Texas Tech answered 3, which is correct. A&M answered 4, which is not correct. Kansas State answered 4, which is not correct. Georgia answered 4, which is not correct. Utah Valley answered 4, which is not correct. Virginia Tech answered 3, which is correct. And William Patterson answered 3, which is correct. I knew a guy one time who was asked a question like this in a job interview. Converting a tax-free yield to a taxable equivalent yield is something that you're going to need to know how to do in your sleep when you sit for the CFP exam. What I do when I do a question like this, I take the interest rate, which is 4, divided by 1 minus the tax rate, so it's 4 divided by 0.72 to arrive at the answer of 5.56%. Good question. All right, Utah Valley, I believe, is choosing our next question. Investments for 100. Investments for 100. And the question is, subtracting the risk-free rate of return from the expected return of a stock will give you the 1, risk premium, 2, beta, 3, reward to risk ratio, or 4, capital gain. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Anybody not have their answer? All right, let's reveal the answer, which is 1, risk premium. Akron answered 1, which is correct. Texas Tech answered 1, which is correct. A&M answered 1, which is correct. Kansas State answered 1, which is correct. Georgia answered 1, which is correct. Utah Valley answered 1, which is correct. Virginia Tech answered 1, which is correct, and William Patterson also answered 1, which is correct. Let's take a look at the scores so far. At this time, in a tie for the lead is Texas Tech and Virginia Tech at 1,300 points. Let's go to the next question. Virginia Tech, you are choosing the next question. Investments for 300. The question is, Davis Company stock has an average return of 10% and has a standard deviation of 4%. What is the probability that the stock will earn a return under 6% and round to the nearest whole number and assume a normal distribution? The answers are 1, 10%, 2, 14%, 3, 16%, or 4, 34%. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Let's reveal the answer, which is 3, 16%. 3 is the correct answer. Akron answered 3, which is correct. Texas Tech answered 4, which is not correct. Texas A&M answered 2, which is not correct. Kansas State answered 4, which is not correct. Georgia answered 1, which is not correct. Utah Valley answered 3, which is correct. Virginia Tech answered 3, which is correct. William Patterson answered 1, which is not correct. When we're talking about standard deviation, we're usually illustrating it with a bell curve, right? And we know that 68% of an investment's potential returns will fall within 1 standard deviation of the average return. So if the average return is 10, what that means is that 68% of the potential returns will be between 6% and 14%. That means that the remaining 32% of the potential returns will have 16% below 1 standard deviation and 16% above 1 standard deviation. So the answer is C, 16%, or 3, 16%. And I believe William Patterson is next to choose a question. Retirement for 300. Oh, it's a Social Security question. The question is, individuals who choose to delay taking their Social Security retirement benefits after their full retirement age will have a yearly increase to their benefit up to age 70 of what percentage? The answer choices are 1, 5%, 2, 6%, 3, 8%, and 4, 10%. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Do we have all of the answers? All right, let's reveal the answer. The correct answer is 3, 8%. Akron answered 2, which is not correct. Texas Tech answered 3, which is correct. Texas A&M answered 1, which is not correct. Kansas State answered 3, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 3, which is correct. Virginia Tech answered 3, which is correct. And William Patterson answered 2, which is not correct. For someone whose full retirement age is 66, for example, they can defer taking their benefits as late as age 70. So they're going to enjoy an increase to their Social Security benefit of 8% times 4 years. So they're going to have a benefit of 32% larger than if they were to take their benefit at full retirement age. So you can start as early as age 62, you can wait as late as age 70, and this is one of the hottest topics in financial planning right now, is helping our clients optimize their Social Security benefits. The decision between making the wrong decision and making the right decision can be hundreds of thousands of dollars in the most extreme cases. And our clients need help with this. The rules around Social Security are confusing and they need our help. So this is a very important part of retirement planning specifically. So good question. And I think we've answered 8 questions. So we're going to go around the corner and Akron will now choose the next question. Investments for $400. A $40 put option on PQR stock is selling for $5. The market value of PQR is $35. Which of the following statements is or are correct? Is it 1, let me read the 3 answer choices. The intrinsic value of the put option is 0. Or number 2, the put option is close to expiration. 3, the holder of the put is likely to exercise. So those are your 3 combination choices. Answer number 1 is 1 only. Answer number 2 is 2 only. 3 is 2 and 3. 4 is 1, 2, and 3. Please start the timer. Five seconds. 1 second, and all of the answers should be to the middle. Do we have all of our answers? Anybody not have an answer? That was a tough question. All right, let's reveal the answer. The answer is 3, 2 and 3, which is the put option is close to expiration and the holder of the put is likely to exercise. Akron answered 3, which is correct. Texas Tech answered 1, which is not correct. Texas A&M answered 3, which is correct. Kansas State answered 4, which is not correct. Georgia answered 3, which is correct. Utah Valley answered 3, which is correct. Virginia Tech answered 1, which is not correct. And William Patterson answered 4, which is not correct. Not only will you need to know how to do options on the CFP exam, but if you're going to sit for the Series 7 exam, you'll need to know options as well. The intrinsic value of a put is the exercise price minus the market price. So in this case, $40 minus $35 is $5. Because the intrinsic value equals the premium, we can assume that it's nearing expiration. It'll get closer and closer to what the premium was as we get closer to expiration. The put is in the money, so the holder will exercise. Very typical option question that you would see on the CFP exam. All right, Texas Tech, what question would you like next? Principles for 400. The question is, all of the following are methods used by the Federal Reserve to control the money supply except 1, reducing reserve requirements, 2, reducing deficit spending, 3, increasing the discount rate, or 4, buying and selling government securities in the open market. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Do we have all of the answers? All right, let's reveal the answer. The answer is 2, reducing deficit spending. Akron answered 2, which is correct. Texas Tech answered 2, which is correct. Texas A&M answered 1, which is not correct. Kansas State answered 2, which is correct. Georgia answered 2, which is correct. Utah Valley answered 2, which is correct. Virginia Tech answered 2, which is correct. William Patterson answered 3, which is not correct. The Federal Reserve sets monetary policy. That's the supply of money in the country. Deficit spending is a matter of fiscal policy. That's the lawmakers on Capitol Hill bickering all day long about taxes and spending. That's fiscal policy. All right? Good question. Texas Tech, I believe you're asking the next question, or choosing. Actually, Texas A&M, you're choosing the next question.
We'll close out the category.
All right. Principles, planning principles for 500. The question is, calculate the net present value of a machine that is purchased for $15,000, sold at the end of year 5 for $5,500, and produces the following cash flows. Year 1 plus 300, year 2 plus 600, year 3 plus 1,200, year 4 plus 2,400, and year 5 plus 2,500, and assume cost of capital of 10%. Round your answer to the nearest dollar. The answer choices are 1, $10,138, 2, $9,827, 3, $7,034, or 4, $6,723. Please start the timer. Ten seconds. 5 seconds. Need to have all of the answers to the middle. Are there any teams that have not submitted their answer yet? Do we have all of the answers? This was a tough question. All right, let's reveal the answer. The answer is number 4, $6,723. Akron, what was your answer? Akron answered 1, which is not correct. Texas Tech answered 1, which is not correct. A&M answered 4, which is correct. Kansas State answered 4, which is correct. Georgia answered 4, which is correct. Utah Valley answered 2, which is not correct. Virginia Tech answered 1, which is not correct. And William Patterson answered 1, which is not correct. This is how I did the calculation on my calculator. This is a cash flow problem. The calculator inputs go like this. 15,000 negative cash flow, 300 cash flow, 600 cash flow, 1,200 cash flow, 2,400 cash flow, $2,500 plus $5,500 equals $8,000 cash flow. 10 is the I, and then you solve for net present value to get $6,723. Cash flow problem. All right. Is Kansas State choosing the next question? Tax for 100. Tax planning for 100. The rate for the next additional increment of taxable income is called what? 1, effective tax rate. 2, earmarked tax rate. 3, average tax rate. Or 4, marginal tax rate. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Let's reveal the answer, which is 4, marginal tax rate. Akron answered 4, which is correct. Texas Tech answered 4, which is correct. Texas A&M answered 4, which is correct. Kansas State answered 4, which is correct. Georgia answered 4, which is correct. Utah Valley answered 4, which is correct. Virginia Tech answered 4, which is correct. William Patterson answered 4, which is correct. The marginal tax rate is the rate that you would pay on the next dollar of income that you earn. So tax rates are actually, they sort of work like in layers. You pay 10% on this much income, then you pay 15% on this much income, and then you pay 25% on the next layer of income. So the next dollar that you would earn is what we refer to as the marginal tax rate. All right. Georgia, you are choosing the next question. Protection for 200. Here's the question. Which of the following types of hazards creates a loss from dishonesty, such as intentionally setting a fire? Is it 1, moral hazard, 2, physical hazard, 3, morale hazard, or 4, character hazard? Please start the timer. Ten seconds. 5 seconds. And the time is up. We should have all of the answers to the middle. Let's reveal the answer, which is 1, moral hazard. Akron answered 1, which is correct. Texas Tech answered 1, which is correct. Texas A&M answered 1, which is correct. Kansas State answered 1, which is correct. Georgia answered 1, which is correct. Utah Valley answered 1, which is correct. Virginia Tech answered 3, which is not correct. And William Patterson answered 1, which is correct. A hazard caused by dishonesty or untruthfulness is a hazard that we call a moral hazard. Misrepresenting oneself on an application would be an example of a moral hazard. A morale hazard, on the other hand, a morale hazard is caused by carelessness, someone who chooses to drive while intoxicated, or someone who goes scuba diving without proper training, or something like that would be an example of a morale hazard. That's the difference between the two. All right, Utah Valley is choosing our next question. Protection for 500. Here's the question. Jill purchases an immediate annuity for $100,000 that will pay her a monthly payment of $644.30 for the rest of her life. Assuming her life expectancy is 25 years, how much of each monthly payment will be taxable? And keep in mind that rounding can vary by a few cents. The answers are 1, $352.46, 2, $333.36, 3, $310.94, or 4, $306.80. Please start the timer. Ten seconds. 2 seconds. And the time is up, and all of the answers should be to the middle. That was a tough question. Do we have all of the answers? All right. Let's reveal the answer, which is $310.94. The answer was 3. Akron answered 3, which is correct. Texas Tech answered 2, which is correct. Answered 2, which is not correct. Texas A&M answered 4, which is not correct. Kansas State answered 3, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 2, which is not correct. Virginia Tech answered 3, which is correct. And William Patterson answered 3, which is correct. This is a good question, and this is an important concept to understand, is the taxability of receiving payments from an annuity. Here's how we do this question. The first thing that we need to do is turn Jill's life expectancy into months so that we're dealing with equal time periods. So if we multiply her life expectancy of 25 years by 12, we get 300 months. 300 months is what we're expecting her life expectancy to be. What we would then do is multiply 300, the 300 months, by the payment that she's expecting to receive of $644.30. That gives us a total of $193,290. If she were to live exactly 300 months, she would receive total payments of $193,290. Now, the $100,000 that she invested in the immediate annuity, that will be received back tax-free. That is a tax-free return of principal. A little bit of each one of those payments will be a tax-free return of principal. The other portion of it will be the taxable portion. So if we subtract the $100,000 from those total payments of $193,290, that gives us $93,290 that would be taxable. If we divide that by the 300 months, we get an answer of $310.96. So the $100,000 will be returned back to Jill as a tax-free return of principal. Everything else will be the taxable portion. So that was the answer. And I believe we have one last question left before we get to 15, and then we'll take a break. One last question before we take a break. Virginia Tech, which question would you like to ask? Protection for 300. All of the following are characteristics of a variable life policy, except 1, producers must have both an insurance and securities license to sell. 2, a wide variety of investment options. 3, a flexible premium. 4, no guarantee of cash value. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Do we have all of the answers? All right, let's reveal the correct answer, which is 3, a flexible premium. Akron answered 3, which is correct. Texas Tech answered 4, which is not correct. Texas A&M answered 1, which is not correct. Kansas State answered 3, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 3, which is correct. Virginia Tech answered 4, which is not correct. And William Patterson answered 1, which is not correct. A flexible premium is not a characteristic of a variable life policy. So the word variable in variable life is referring to the investment securities that the policy is invested in. If you want a flexible premium, answer if you know the answer. If you want a flexible premium, you will need a universal life policy or a variable universal life policy. Exactly right. All right, so that was 15. Let's check the scores. Right now, it is a close race between Akron is 3,000, Virginia Tech is in second at 2,900, and K-State is in third at 2,800. So 200 points separate the top 3 teams. Let's take a 10-minute break. Let's come back in 10 minutes, and we'll finish up. All right, it's time to get started again. I'm going to ask everyone to please take your seats, and the audience should return to their seats, and we're going to get ready to answer the final 15 questions, and then after the 30th question, we will also have a final question that will be worth 750 points. So again, just to take a look at our scores, Akron is leading with 3,000 points, Virginia Tech is in second with 2,900, and Kansas State is in third with 2,800 points. And I believe we left off with William Patterson, who's going to choose our next question. Tax for 500. Tax for 500. Itemized deductions that are subject to a 2% hurdle are referred to as miscellaneous itemized deductions. The taxpayer may only deduct the amount of the total miscellaneous deductions that exceed 2% of their adjusted gross income. Which of the following deductions are not subject to this 2% hurdle? Is it 1, unreimbursed employee business expenses, 2, losses on terminated IRAs, 3, fees for tax advice and preparation, or 4, losses on terminated annuity contracts? Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Let's reveal the answer, which is 4, losses on terminated annuity contracts. Akron answered 2, which is not correct. Texas Tech answered 4, which is correct. Texas A&M answered 4, which is correct. Kansas State answered 4, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 4, which is correct. Virginia Tech answered 2, which is not correct. William Patterson answered 4, which is correct. How do the lawmakers come up with this stuff, huh? The losses on terminated annuity contracts can be deducted with no limitation. They are not subject to that 2% hurdle. Losses on terminated IRAs are subject to the 2% hurdle. So this is a very odd part of the tax code, this 2% hurdle, but it's important that we understand it. That's a tough question. All right, let's bring it back over to Akron, who's going to choose our next question. Investments for 500. All right, the question is, modern asset allocation is based upon the model developed by Harry Markowitz. Which of the following statements is or are correctly identified with this model? 1, the risk, return, and covariance of assets are important input variables in creating portfolios. 2, negatively correlated assets are necessary to reduce the risk of portfolios. 3, in creating a portfolio, diversifying across asset types, such as stocks and bonds, is less effective than diversifying within an asset type. 4, the efficient frontier is relatively insensitive to the input variable. The answers are 1, 1 only, 2, 1 and 2, 3, 1, 2 and 3, or 4, 1, 2 and 4. Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. That was a tough question. Do we have all the answers? Okay, let's reveal the answer. The answer is 1, which is 1 only. Akron answered 1, which is correct. Texas Tech answered 2, which is not correct. Texas A&M answered 4, which is not correct. Kansas State answered 2, which is not correct. Georgia answered 2, which is not correct. Utah Valley answered 4, which is not correct. Virginia Tech answered 4, which is not correct. William Patterson answered 4, which is not correct. And was Akron the only team who got that one? Nice job. Nice job. Number 2 is incorrect because of the word necessary. There are several ways to reduce portfolio risk. Number 3 is incorrect because diversifying across asset types is more effective than within one asset type. And number 4 is incorrect because all the input variables in statement number 1 create the efficient frontier. So the answer was 1 only. Is Texas Tech choosing our next question? I believe so. What would you like? A state for 100? A state for 100. What is the name of a person who writes a will on their own behalf? Is it 1, executor, 2, beneficiary, 3, settlor, or 4, testator? Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Let's reveal the answer, which is 4, testator. Akron answered 4, which is correct. Texas Tech answered 4, which is correct. Texas A&M answered 4, which is correct. Kansas State answered 4, which is correct. Utah Valley answered 4, which is correct. Georgia answered 4, which is correct. Virginia Tech answered 4, which is correct. And William Patterson answering 4 means that everyone in the room knows that a person who writes a will and says, "This is my last will and testament," is a testator. Very good. All right. Who is next to choose? Texas A&M? Which one would you like? A state for 400. Here's the question. If a charitable remainder annuity trust, or CRAT, pays a fixed annuity to the donor each year for life, what does a charitable remainder unitrust, or CRUT, pay the recipient? Is it 1, an annual distribution of the trust income, 2, nothing, the charity receives the payment and the remainder interest goes to a non-charitable beneficiary, 3, a fixed percentage of the annually determined fair market value, or 4, a lump sum payment to the donor's estate at death and the rest to a charitable beneficiary? Please start the timer. Ten seconds. 5 seconds. And the time is up. All of the answers should be to the middle. Do we have all of the answers? All right, let's reveal the answer. It is 3, a fixed percentage of the annually determined fair market value. Akron answered 3, which is correct. Texas Tech answered 3, which is correct. Texas A&M answered 4, which is not correct. Kansas State answered 3, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 3, which is correct. Virginia Tech answered 3, which is correct. And William Patterson answered 3, which is correct. A charitable remainder annuity trust pays a fixed dollar amount, while a charitable remainder unit trust pays a fixed percentage of the fair market value. So that's the difference between those two types of trusts. All right. Is Kansas State choosing our next question? Which one would you like? What for 200? Tax for 200. Tax planning for 200. The question is, all of the following income items are excluded from taxation except, is it 1, interest income from municipal bonds, 2, cash or property received by inheritance, 3, alimony received, or 4, gain on the sale of a principal residence? Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. Do we have all the answers? All right, let's reveal the answer, which is 3, alimony received. 3 is the right answer. Akron answered 3, which is correct. Texas Tech answered 3, which is correct. Texas A&M answered 2, which is not correct. Kansas State answered 2, which is not correct. Georgia answered 4, which is not correct. Utah Valley answered 3, which is correct. Virginia Tech answered 4, which is not correct. And William Patterson answered 4, which is not correct. This was a hard 200-point question. Child support is received tax-free. Alimony is not. Alimony is taxable income to the recipient, and it is tax deductible for the person paying the alimony. All right? So that's the difference between alimony and child support. It can be a little bit confusing. All right. I think Georgia is asking or choosing our next question. Protection for 400. Protection for 400. Which form of homeowner insurance provides property coverage for owners of condominiums? Is it 1, HO2, 2, HO3, 3, HO4, or 4, HO6? Please start the timer. Ten seconds. And the time is up. We need to have all of the answers to the middle. Let's reveal the answer, which is 6. Number 4, HO6. The correct answer was 4. Akron answered 4, which is correct. Texas Tech answered 4, which is correct. A&M answered 2, which is not correct. Kansas State answered 4, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 3, which is not correct. Virginia Tech answered 4, which is correct. And William Patterson answered 4, which is correct. I love this question because in my lifetime I have had 3 of these 4 that are listed up here. HO2 and HO3 are for single-family homes. HO6 is for condos, and I had an HO4 right after college when I was a renter. Exactly. Rental insurance is an HO4. It protects your property and your apartment. Okay? Good question. Who is choosing next? Is it Utah Valley? Investments for 200. Here's the question. Your client makes a $5,000 investment that is earning 9% per year. Using the rule of 72, how long will it take for their investment to earn $20,000? Is it 1, 14 years, 2, 16 years, 3, 15.2 years, or 4, 18 years? Please start the timer. Ten seconds. And the time is up. We should have all of the answers to the middle. Do we have all of the answers to the middle? All right, let's reveal the answer. The correct answer is 2, 16 years. Akron answered 2, which is correct. Texas Tech answered 2, which is correct. Texas A&M answered 2, which is correct. Kansas State answered 2, which is correct. Georgia answered 2, which is correct. Utah Valley answered 2, which is correct. Virginia Tech answered 2, which is correct. And William Patterson answered 4, which is not correct. The rule of 72 doesn't seem very scientific, but we still use it. It's just a quick way to determine how long is it going to take to double my investment. In this case, we're going from 5,000 to 20,000, so that means we need 2 doubling periods, right? 2 doubling periods. So divide 72 by 9%, and we get 8, then multiply it by 2, because we're wondering how long is it going to take to double my investment twice. So 8 times 2 is 16 years. 16 is the answer. And I think Virginia Tech is choosing our next question. A state for 300. Which of the following would not be included in the probate estate? Is it 1, a farm owned as community property, 2, life insurance proceeds with an estate as the named beneficiary, 3, savings account owned by the decedent, or 4, a revocable trust? Please start the timer. Ten seconds. And the time is up. All of the answers should be to the middle. All the answers should be to the middle. Let's reveal the answer. The answer is 4, a revocable trust. Akron answered 2, which is not correct. Texas Tech answered 4, which is correct. Texas A&M answered 2, which is not correct. Kansas State answered 4, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 2, which is not correct. Virginia Tech answered 4, which is correct. William Patterson answered 2, which is not correct. There's a lot of reasons to do a trust, but one of the main reasons that people use trusts is to avoid probate and to simplify the estate for the heirs. Very common, a revocable trust is used to simplify the estate and avoid probate. And the same is true really for anything with a named beneficiary. If number 3 said savings account owned by the decedent with his wife listed as TOD, well then that would avoid probate, okay? William Patterson, are you choosing the next question? Tax for 300? All right, the question is, all of the following are deductions from adjusted gross income or below-the-line deductions, except 1, contributions to traditional IRAs, 2, home mortgage interest, 3, charitable contributions, or 4, real estate taxes on a home. Please start the timer. Three seconds. And the time is up. All of the answers need to be to the middle. Let's reveal the answer. The correct answer is 1, contributions to traditional IRAs. Akron answered 1, which is correct. Texas Tech answered 1, which is correct. Texas A&M answered 1, which is correct. Kansas State answered 4, which is not correct. Georgia answered 4, which is not correct. Utah Valley answered 3, which is not correct. Virginia Tech answered 2, which is not correct. William Patterson answered 1, which is correct. IRA contributions are deductions for AGI, or an above-the-line deduction. So if I make $50,000 a year and I contribute $5,000 to an IRA, my AGI is now down to $45,000. So IRA contributions, unlike the coveted home mortgage interest deduction, are above-the-line deductions. So it's very important to understand. Above the line versus below the line. All right, and I think we're going back around to Akron. Actually, let's check our scores real quickly. It looks as though Akron is in the lead with 5,100, and then we have a two-way tie for second between Texas Tech and Kansas State. So only 400 points separate the top 3 teams at this time. And we've got 6 questions remaining before the final question. All right? Akron, what would you like to do next? Retirement for 500. Amounts within a Roth IRA may have come from contributions, conversions from a traditional IRA, or earnings. Roth IRA distributions are required to be treated as occurring in a specific order. What is the order in which distributions are made from a Roth IRA? Is it 1, contributions, conversions, earnings, 2, conversions, earnings, contributions, 3, earnings, conversions, contributions, or 4, earnings, contributions, conversions? Please start the timer. Ten seconds. One second, and the time is up. We need to have all of the answers to the middle. Tough question. Do we have all of the answers, volunteers? All right, let's reveal the answer, which is 1, contributions, conversions, and earnings, in that order. Akron answered 1, which is correct. Texas Tech answered 1, which is correct. Texas A&M answered 4, which is not correct. Kansas State answered 1, which is correct. University of Georgia answered 3, which is not correct. Utah Valley answered 1, which is correct. Virginia Tech answered 1, which is correct. And William Patterson answered 1, which is correct. This is one of the most important characteristics of a Roth IRA. If I put money in and 5 years later I decide I need the money, I can withdraw my contributions free of tax and penalty. That allows me to make non-qualified distributions and use the money for anything I need to, including education for my kids. So a Roth can actually be used sort of as a dual savings vehicle for retirement and education, because I can withdraw my contributions later to pay education expenses if I need to. So very good question. It's important to understand the order of withdrawals that are made from a Roth IRA. You don't get to choose. It goes in this order, all right? Texas Tech is choosing the next question. Tax for 400? Okay. Here's the question. In 2015, you may be eligible to make at least a partial Roth IRA contribution if your adjusted gross income on a joint return does not exceed what? Is it 1, $131,000, 2, $145,000, 3, $193,000, or 4, $250,000? Please start the timer. Five seconds. And the time is up. Do we have all of the answers to the middle? All right, let's reveal the answer. The answer is number 3, 193,000 is the answer. Akron answered 3, which is correct. Texas Tech answered 3, which is correct. Texas A&M answered 3, which is correct. Kansas State answered 3, which is correct. The University of Georgia answered 3, which is correct. Utah Valley answered 3, which is correct. Virginia Tech answered 3, which is correct. And William Patterson also answered 3, which is correct, meaning that this room knows their tax tables very, very well when it comes to IRA contributions. Excellent. Not everyone can contribute to a Roth IRA. There are income limitations. If you earn in 2015, if joint filers have AGI of less than 183,000, they can make a full Roth contribution. If they have income over 193,000, they can't make any Roth contribution. And then if you're in between 183 and 193, that's the phase out where you can make a portion of a Roth IRA contribution. Very good question. All right, where did we leave off? Who is choosing our next question? Texas A&M? Texas A&M, what would you like?
We'll finish out a state.
A state for 200. A state for 200. Which of the following is a legal document expressing an individual's last wishes regarding sustainment of life under specific circumstances? Is it 1, power of attorney, 2, living will, 3, survivorship clause, or 4, statutory will? Please start the timer. Ten seconds. The time is up. We need to have all the answers to the middle. Looks like we do. Go ahead and reveal the answer, which is 2, living will. Living will is the answer. Akron answered 2, which is correct. Texas Tech answered 2, which is correct. Texas A&M answered 2, which is correct. Kansas State answered 2, which is correct. Georgia answered 2, which is correct. Utah Valley answered 2, which is correct. Virginia Tech answered 2, which is correct. And William Patterson also answered 2, which is correct. Although most of us don't practice law, it's important that we ensure that our clients have all of the right documents in place, not only a will or a power of attorney, but also what do you want to do if you're incapacitated? If you're in a coma and can't make decisions for yourself, what do you want us to do? That's what a living will help with. It's very important as planners that we ensure our clients have all of these documents in place. And those are only a few. There's others as well. If you have children, you should have guardianship provisions. We as advisors can be very, very helpful and add a lot of value to our clients by making sure they have all of these documents in place. Good question. Kansas State is the next to choose a question. 100 for retirement. Retirement for 100. Which of the following is an example of a defined benefit plan? Is it 1, IRA, 2, Roth IRA, 3, pension, or 4, 401k? Please start the timer. Ten seconds. And the time is up. We should have all of the answers to the middle. Looks like we do. Let's reveal the answer. 3, pension is a defined benefit plan. Akron answered 3, which is correct. Texas Tech was 3, which is correct. Texas A&M answered 3, which is correct. Kansas State answered 3, which is correct. University of Georgia answered 3, which is correct. Utah Valley answered 3, which is correct. Virginia Tech answered 3, which is correct. And William Patterson answered 3, which is correct. Pension is an example of a defined benefit plan. A 401k at work, that's a defined contribution plan. All right. And the 2 questions remaining are both in the retirement category. At this time, looks like Akron is still leading with 6,300 points. Texas Tech and Kansas State are still tied for second and third place at 5,900. Virginia Tech would be in fourth at 5,500. All right, there's 2 questions remaining before we do the final question. Georgia, which question would you like next? How much? 200? Retirement for 200. Which of the following is a retirement savings plan available for employees of state and local governments and tax-exempt non-governmental entities? Is it 1, 401k plan, 2, 403b plan, 3, 457 plan, or 4, 529 plan? Please start the timer. Ten seconds. And the time is up. All of the answers to the middle. Let's reveal the answer, which is 3, 457 plan. Akron answered 3, which is correct. Texas Tech answered 2, which is not correct. Texas A&M answered 3, which is correct. Kansas State answered 3, which is correct. Georgia answered 2, which is not correct. Utah Valley answered 2, which is not correct. Virginia Tech answered 2, which is not correct. And William Patterson answered 2, which is not correct. State and local government employees generally use a 457 plan. When you're thinking about school teachers, that's generally going to be a 403b plan. So when you see 403b, think about school teachers, okay? 403b is for school teachers. All right, so we have one question remaining, which is retirement 400. Let's do that question, and then we're going to get ready for our final question. Retirement for 400. Here it is. Which of the following investments are prohibited in an IRA? Is it 1, life insurance, 2, zero coupon bonds, 3, gold coins, or 4, limited partnership interests? Please start the timer. 10 seconds. And the time is up. All of the answers should be to the middle. Looks like we've got all of the answers. Go ahead and reveal the answer, which is 1. Life insurance cannot be held in an IRA. Akron answered 3, which is not correct. Texas Tech answered 1, which is correct. Texas A&M answered 3, which is not correct. Kansas State answered 1, which is correct. Georgia answered 3, which is not correct. Utah Valley answered 1, which is correct. Virginia Tech answered 4, which is not correct. And William Patterson answered 4, which is not correct. I have no idea how you would put gold coins in an IRA. I assume that that would require some fancy paperwork, but apparently it can be done. Life insurance cannot be held in an IRA. And some people argue that nor should it be in an IRA. Life insurance is already a tax-sheltered investment. Why would we need to put it into a tax-sheltered account, right? Let's check where we are for scores. And we have what appears to be a tie at the moment for first place between Kansas State and Akron at 6,500, and 200 points behind them is Texas Tech at 6,300. So we have one question remaining, which is a 750-point question. Are we ready for the final question? All right, here it is. The final question is this. All of the following are characteristics of a limited liability company, except 1, income is taxed at both the individual and corporate level. 2, unlimited number of owners. 3, foreign investors are allowed. Or 4, ownership interests may be transferred to trusts. Please start the timer. Fifteen seconds. 5 seconds. And the time is up. Do we have all of the answers to the middle? It looks like we do. So let's reveal the answer, which is 1, income is taxed at both the individual and corporate level. Let's see what our answers were. Akron answered 1, which is correct. Texas Tech answered 3, which is not correct. Texas A&M answered 4, which is not correct. Kansas State answered 3, which is not correct. University of Georgia answered 1, which is correct. Utah Valley answered 1, which is correct. Virginia Tech answered 1, which is correct. And William Patterson answered 2, which is not correct. That was a very good question. It's a tough question. When the presidential candidates on TV are talking about corporate tax rates, they are not talking about LLCs or LLPs or S corporations, companies like that. Organizations like that are what we refer to as pass-through entities. The income from those organizations is passed through to the individual owners. The individual owners, they receive a tax form in the mail called a K-1 that will show how much income they are responsible for reporting on their own tax return. So it's a pass-through entity. So I believe we have a clear winner. Let's go to the final score. Go ahead and close that out. And our champion is Akron with 7,250 points. Way to go. Congratulations also to everyone. Second place was Kansas State at 6,500 and Texas Tech at 6,300. Let me recognize the individuals on the Akron team. Akron is made up of James Dawson. Is it Sonara? Sonara. James Dawson, Sonara 4, and Aaron Gates. Congratulations, Akron. All right, at this time, what we are also going to do is reveal the winners of the other individual phases, Phase 1 and Phase 2. We do know the winners of each of those phases. Now, each of these 3 phases have unequal weighting to them, all right? So on Monday, at the closing session, on Monday, they're going to reveal who the winners are. The top 3 organizations, the top 3 universities are going to receive scholarships, and correct me, Destry, if I'm wrong, but the first place school is going to be awarded a $10,000 scholarship, second place will be a $5,000 scholarship, and the third place team will receive a $1,000 scholarship. So, at the final closing session on Monday, we're going to reveal who those schools are. The winner of Phase 1, which was the judging of the written plan itself, was the University of Akron. Congratulations, Akron. Phase 2, again, was the oral presentation, which occurred yesterday, the oral presentation of the financial plans. And the winner of that phase was Kansas State University. Congratulations, Kansas State. The team members for Kansas State are Mariah Bosch, Cole Foster,